Hey everyone, Brian Hoops with Midwest Market Solutions and our Market Insider TV. This is our WASD Supply and Demand Report webinar. And report was out earlier today. And, going into it, we saw big gains in corn and soybeans. Prior to the report's release, I was a little fearful we'd see maybe a buy the rumor, sell the facts sort of type trade, especially if we didn't get what we wanted to see from the USDA. We did not get what we wanted. Soybeans right in line with expectations, wheat right in line with expectations, but the corn was a little bit of a disappointment. I shouldn't say a little bit, it was a big disappointment. USDA, we'll talk about the numbers here, but really failed to inspire the trade with what they had to say and produce an outside day reversal. We're going to see a little, probably 1 or 2 days of chart healing, lower prices before we can resume the uptrend. But I think the uptrend will resume. It looks like a strong bull market. We try to send out what we can on our text service, but also follow us on Twitter for market information. That's a great place at Midwest Markets on Twitter. So we have 10 licensed brokers, offices throughout the upper Midwest, Missouri, Iowa, North and South Dakota, Minnesota, Nebraska, and out in Montana. Our clearing firm is R.J. O'Brien. That's the oldest clearing firm from the CME. So, ending stocks announced today. Corn at 1.502 billion bushels. That was what the trade was disappointed in. So you can look at their estimate at 1.382. We far cry from that. Almost 120 million bushels away from that. We were 50 million less than last month, significantly down from last year. But this 50 million was not nearly what the trade had hoped for, and we saw lower prices as a result. Now the soybeans right in line with estimates, and wheat right in line with estimates. In fact, wheat was unchanged from last month. Soybeans 20 million bushels less than a month ago. World production numbers were another source that was unchanged and a disappointment to the trade. You look at Brazil, they've had some, real poor start to the growing season, but have improved. They have so many hectares planted this year that even with a little bit of yield reduction, they're still going to produce a massive crop. So this 133 looks to be a record, all-time record for soybeans, unchanged from last month, but significantly above last year. You look at Argentina's corn, down significantly from last year, but unchanged from a month ago. Soybeans virtually unchanged from a year ago and from last month. So, this was, I thought, was another aspect here. A lot of this news items, disappointment, and that's why we saw lower prices in the corn today. Here's another disappointment. You look at world ending stocks. Corn actually increased from last month. The trade was expecting a decrease, but we actually increased world ending stocks from last month. Soybean stocks down slightly. Wheat stocks down significantly, and well below the average trade guess. This should have been more positive for the wheat market than what I think was seen. And the wheat's reaction to this was disappointing, but I think the lower corn played a part of that as well. Chinese import estimates, big jump here in Chinese corn imports, which begs the question, if they're importing this much corn, 24 million metric tons, why did you only increase exports by 50 million this month? Remember last month, they actually lowered exports by 100. So since December, they've said corn exports expected to go down by 50 million bushels, and that's certainly not going to be the case. All right, let's look at some commodities here, and there wasn't that much changes here to go through. Of course, no yields or harvested acres or anything like that, so no production changes. The only change the USDA made out of all this ethanol usage and feed usage, all that stayed unchanged, which I think you can believe. The feed usage may be a little bit low, and from what I believe, I think we're probably feeding a little bit more corn to the cattle. Weights are staying up. Hog weights have been up above last year, and bitterly cold here for almost a month. That's going to increase feed usage. Exports were increased by 50 million. So this 2.6 is a good, really good number, no doubt about it. It may be under where we are at in the end of the day. So I think USDA is slowly going to raise this up, and this is one thing we noted in our commentaries and our newsletters is USDA is going to have to make changes as far as our exports. But will they do that all today, or will they do it in some in March, some in April? And they're choosing to go very, very slowly. That dropped our ending stocks by 50 million bushels. As far as the supply and demand balance sheets go, these two columns here are RJO's column. This is USDA, what they said today. RJO is considerably less. Look at their export usage compared to what the USDA is, 2.8 billion. Feed usage, like I mentioned, that's also a little bit higher than what the current USDA number is. So they have a much tighter scenario, 8% stocks to usage ratio, and ending stocks almost 275 million less than the USDA. So much stronger numbers here from the from RGO than what the USDA told us today. As far as soybeans, very minimal changes here as well. Now here's the soybean exports, which have not seen the huge Chinese buying that we've seen. The corn market has had just a week ago, but yet they made the change here, but export increased by 20 million after no changes last month. 20 million increase here, and ending stocks down 20 million, same number here to 120 million bushels. So this number I think is obviously very strong, very positive. They did not increase the average farm gate price, but I think once we look at these stocks to usage ratio, you're going to see that prices probably have not topped yet and will continue to work their way higher. So again, no changes on the supply and demand balance sheets for corn or for soybeans here as far as production goes, just like corn. The crush, RJO is not quite as optimistic as USDA. I think the crush, if anything, is probably undervalued, not over. So that's my opinion, is they need to increase this a little bit. Exports is probably a fair number, but they're at 120. I think your crush numbers are going to increase maybe 10, 15 million bushels over the USDA, and that's going to cut this ending stocks down to closer to 105, 110. I don't know that we'll ever see a 92 printed again. Maybe we will. I got a feeling that this Brazil's soybean crop, once they're able to harvest, and they are delayed because of rains, but once they get rolling in harvest, that'll overtake U.S. exports, and we won't see another increase in this export forecast until maybe very late in the growing season. But in the near term, this may be the last increase that we see. But we're looking at 120 million bushel carryout, stocks to use ratio 2.6. That's the tightest since 2013 and 14. That argues for higher prices. I've thrown this chart out the last 3 webinars, and it's still worthwhile. Here's February, where we are at. You can see prices broke a little bit in 2004 and then rallied to make new highs, and this rally continued and all the way until April, when we started planting corn and soybeans on a nationwide basis. That's when we actually made a peak here, kind of a double top. We worked lower, had a secondary rally, and then a big drop off going into the summer before we went into deliveries and had a final kind of blow off type run. But this is kind of my analog year. When we started this rally back in August and September of last fall, I talked about this market here, inverted market. You go back to 2003, 2004 when it was inverted. This market continued to rally, trying to ration demand, trying to get into a price level that'll kind of slow some of that demand down. As I look at the quotes tonight, we're still inverted. March is still above May, and that's still 20 cents premium to the July. So no change in the structure of the market. It's still a bullish structured market. For wheat, virtually no changes here. When I say virtually, there is none. No changes at all to the wheat balance sheet. Still ending stocks at 836 million. Supply and demand balance sheets, RJO doesn't argue too much with the USDA. They have 812 million bushel carryout, as they think exports could be increased by 10 million. There's no argument there. That's very possible. Feed usage could be increased as well as corn feed usage, but probably not much more than this 15 million. So this is still a big stocks to use ratio, 37, 39%, still a huge number. You look back, not as big as the 50s that we saw in the last 4 or 5 years, but certainly not a real bullish number either. So unfortunately, not much of a bull market in wheat. We are following corn and soybeans and whatever those markets tend to do. A couple strategies. I think you got to maintain ownership of corn and soybeans through options and futures or the cash markets. I prefer futures and options just from the standpoint that you get more bang for your buck using the futures and options market. You can, you make your sales at harvest, which we recommended, and then buying them back with the board. I think you're getting just a better return doing it that way, much less money tied up. And also, planters begin to roll into the spring, that's what the time to turn defensive. We had a lot of calls in January about buying puts and locking in some downside protection, and don't want to talk you out of that strategy, but I think the timing may be better when we start planting. When those planters begin to roll in the spring, that's when you really want to turn defensive with sales. Buy some puts, maybe buy puts, sell calls. All these strategies are something to implement during the spring planning time frame. But right now, let's maintain ownership through futures and options, cash markets. Just maintain ownership somehow, some way. I don't think the highs are in yet. It looks like we could have a little bit of a correction here in another day or two, but then higher prices should be seen. Thank you for your attention, your participation in tonight's meeting. Feel free to contact us. You can find a list of all of our brokers at our website, MidwestMarketSolutions.com. Brian Hoops for Midwest Markets.